All right, welcome to video 3 in the 4 video series where I'm talking about my model. This video is going to be about the number 3. I've just finished up recording video 2, so I might as well just jump right into video 3 and video 4 while I'm at it. Um, so yeah, we're looking at number 3 this video and the characteristics behind this number. Um, the difference between the number 3 and the number 1 and 2 is that you have to add something more specific to it. Okay? You will have to understand where all the shit show levels are located at. And you have to divide price into two different sections. It gets a bit more complicated in this case, right? Um, and the reason why we do this is simply because, very simply saying, we know that the number 2 will become the shit show level whenever this one breaches number 1, right? We've talked about that. We talked about the last video as well. So if you have not watched that yet, go back, watch it before you watch this. You will just complicate things for you otherwise. When number 2 reaches above number 1, this becomes the shit show level on the downside, okay? So whenever this happens, right, this is now a strong POI. We know that. But sometimes price might do this. And sometimes price might do that. So how do we know? How do we know? There is one way to understand this, but that is more of taught on a more advanced level. There's one really easy way to understand the number 3 and how it's acting in the sequence. But what is also important here is that the absolute, most basic way to understand this is based on where is all the shit show levels located at, right? Where are they located at? And if you don't know where the levels are located at, you will have no idea of what is happening. You will need to understand: are we going up? Are we going down? Are we bouncing here? Are we bouncing there? That's what you need to understand. Okay. So by price going basically down here and going back up here, there's a reason for it. And if price just pushed down into this level, there's a reason for it as well. Okay. We can divide it up into 3 sections. Number 1 is something to bounce on. Okay. This can be met by, either like an unmitigated zone, it can be imbalance, it can be this and that, and you kind of have to understand that based on what has happened over here. What can we bounce on? If there's not something significant that we can bounce on, we're most likely not bouncing from here to push us back down into this level. So you need to find something to bounce on that is significant enough for price to head back up into this 50% level and push down, right? Something needs to be like super specific. You will know, like, you'll just find something, be like, it is a very high likelihood of it bouncing from this level that can push price down lower to basically accumulate more and pushing away from it or continuing to go further down. Number 2, SS levels on the upside. In the last video I mentioned that if this ever happens and price never taps back into one of these areas, you will leave that on the chart. Okay? You will have that left out on the chart. You will not clean that away from your chart at the end of the day. or end of session or end of this or end of the hour. I like don't care about that. This needs to stay on there because you will understand where price is potentially heading towards. And I talked about this the last video as well. Is it really a good idea for us to take a short right in between this level and this level? No, it's a horrible idea because suddenly you're basically now guessing on which price is going to do. Now, more advanced, that I'm teaching my friends and stuff, is that something happens in here that tells you exactly where it's heading next. But what I'm saying is that uh, if price is in between here, you're basically sitting there like a duck being ready to get slaughtered both ways. Let's say you take a short here and it goes up to here and it stops you out. And then you're like, okay, we're going up, so we're most likely taking a long from this level because it will become a 2. Nope, it's going to kill that downside. You don't want to be stuck in the middle. Because see, when we're taking a long setup from this point to reach up into this area or potentially this area, what is happening is that price moves up like this. And you're saying, I'm getting out because now price will go back down here. No, nothing is telling you that. Nothing is telling you that. You just know that this is a strong POI. When it's going to play out, you do not yet know. You will understand that by video 4 or what I'm telling you right now. Where are the located SS levels at? Where are they located at? If this is an SS level on the upside, right? We shouldn't take a short from here because price can immediately shoot back up here. But guess what? If price starts to go down into this level, suddenly, is there any more SS levels down here? Let's say there's not a single one on the downside. This is when you instead, for looking for a short, you're now looking for a long setup to run up in here, which would also be a 4 and a 5. Okay? So the number 3 needs to be adaptive. You need to adapt accordingly. If you see a low probability scenario, you don't want to take a short or you do not want to take a long. If there's SS levels on the upside that you think we are going to reach for, but also SS levels on the downside that you think we're going to reach for, guess what, man? You're 50-50. You're 50-50. Do you want to gamble on that or no? It's up to you. You can be a dumbass and take a short, but there's a 50-50 chance that you will lose. And I don't like those odds. I can go all in on black on roulette, right? It would be the same probabilities. I don't want to be there. Now, if something happens in here, that's a whole different situation. But I'm talking about the overall perspective that you guys need to understand. If there's SS levels on the upside and you're looking at 3 in a bullish sequence from the 2, you can take the long setup from here. You shouldn't take a short setup here. But you could potentially take a long setup here if you believe there's no other targets on the downside or if you don't see any other targets on the downside. Then you can look for a long setup to the upside to reach in for this SS level. That's completely fine. But taking a short in a scenario where you have levels both above you and below you, and you're in here thinking you know exactly what's going to happen next, you'll get screwed 50 times over. Instead of saying, well, if price reaches here, I'm looking to take a short down to here. Or if price reaches down here, I'm looking to take a long up to here. See how now suddenly all of the randomness, you now have increased your hit rate by a shit ton because you're waiting. Mentally, physically waiting for a higher probability to play out. Again, I can take all moves up and down, up and down, up and down, but that wouldn't increase my hit rate. That would make me, number one, a loser because I'm sitting here being stuck by the screen all day. And number two, it would destroy me mentally. Number three, it would reduce my hit rate because now I'm not looking for the higher probability scenarios. I'm looking for the just random probabilities and just like, hopefully I win here. We are not working like that. That's for losers. That's for unprofitable traders. And I will not accept that. So number three needs to find something of importance to bounce on, including understanding, do we have any more targets on the upside that we can reach? If you are saying, no, I don't think so, then you can take that trade. But if you're saying, well, we might have one up there, and you still take that trade, you're a dumbass. Complete dumbass. Because now you just ruined your hit rate because you feel like you want to take a trade. And I've seen this so many times. People are like, oh, why did this not work? Well, guess what? There's shit show levels all the way to the upside and you're looking for a short. Well, there's an SS level on the downside. Well, it's not looking to go there right now. It's clearly not looking to go there. It needs to clean up the mess it made up here. The shit show levels up here needs to be taken before it starts to run the opposing way. And leaving an SS level means only what? That we will go back to that level sooner or later. Sooner or later, that level is going to get killed. When? You do not know. Unless you use specific price inside of specific price. And look to your probabilities. If there is not a single SS level on the upside, but 5 on the downside, maybe you shouldn't look for long setups. Maybe you should just wait, relax, breathe. And then when there's a sequence playing out up here telling you where we are going, you're now looking to take it all the way back down, catch everything to the downside until we reach the lowest point. Then you're doing what? Waiting for a sequence that tells you exactly where we're heading towards the left out SS levels on the upside. And if price is super, 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 super efficient and does not leave a single SS, which I think it was like in October, it did that a bunch, where no matter what, it went up here and went down here and then took out the high. That's what I call an basically super high efficient sequence playing out because we are running everything. Every single number is doing what it's supposed to do before we continue. Every number has the purpose, it completes its purpose, and then it continues. But now what we have seen recently is a bunch of failures back and forth, back and forth. The two fails to run the one. That's not a two. Two runs the one, but we fail to run the two when the three is created to run down lower. Well, why? Because of this, because of that, because of this, because of that. And there you go. You have to create that story now, because if you don't get the story, you're screwed. And this is why it's so important to, when you see the shit show level being created and left out on the chart, price will return to that area. I'm not saying that it will not. I'm saying it will. I just don't know exactly when, where, and how. But it's going to tell me how it's going to reach that level right in front of my eyes. That's why we can read price, because it will tell me. We're not guessing. This right here is a level of guessing. This up here is no longer a level of guessing when it starts to do something that tells you that we're going to go down. And what will tell you if we're going up or down will be in the next video, video 4. It will tell you exactly where we're going. Now, what you also need to understand, and what is very fascinating about this, is that number 3, number 2, and number 1 fits completely different to each and every single one of you listening right now. The number two to run number one is, for example, my favorite setup. That's how I take my trades. While one of the guys that I'm teaching privately, a friend of mine, he loves to take the number threes, for example, or at least he used to love to take number threes. It made sense to him, right? But for me, it made more sense to take number twos, and for somebody, it makes a lot of sense to take four and five, but not two and three. See what I mean? You have to also understand that, like I said in the last video, what is your edge? What does resonate with you? This gives you multiple setups in one sequence, and there's a bunch of sequences every single day, but you have to understand which one does resonate with me the most. What makes sense to me, right? If it makes sense to you, great. You take that one. You go with it. Amazing. Have at it. Something has to make sense. And the focus on number three and the characteristics behind number three is that it will need direction, left out SS levels on the downside, and you have to weigh in a balance between, okay, are we most likely going to continue up here, or are we most likely going to switch back over to the downside? You have to understand that based on what has happened prior when the number three before has failed to run number two, meaning left out SS levels, will decide if number three is going to push down into number two immediately or if it's going to do that later. That's why you have to create that story for yourself. And I don't want to take this, you can go extremely deep on number three, but I'm not, I don't feel like that's the right call right now. I just want to give this the simple, easy explanation. Number three is very well fitted together with number two, based on what has happened before. And a lot of people say don't trade what has happened before. No, but you use it as POIs, your interests in the market, interesting levels for you. That's the only thing you're doing, but you're trading what is happening now based on where you want to reach, what you're looking for, what levels are important for you. That's the strong POIs that I'm talking about, the shit show levels left out. It's not a bad thing, they being left out. It just means that price has been insufficient at that very specific area, so price has now to go get that level to then change ideas, direction, flow, you name it, whatever you call it. So with that said, that's number three in the 4 video series. It's a real quick video for you guys, just to make it very, very simple. The next video is going to be very important for us to kind of summarize everything, to fit everything together, to get everything basically, okay, how do we take all of these, clump them together and start to understand price for what it really is in different directions. And that's how I specifically read price and understand if we're bullish or bearish all the time in the order flow. That will be all for me for this video. Hope you enjoyed. Uh, share it with your dog and uncle or whatever. Uh, I don't care, really. Good luck. See you in the next video.